The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday morning, 9:06 a.m. We got about 24 minutes to go until the start of trading, and we're going to get another record open, folks. You got the S&Ps right now up 5 points at 47.87. NASDAQ 100 up about 45 points right now. You're within 160 points of the all-time highs. You take a look at the NASDAQ 100. Bumping up against that level, November 22nd, about 5 weeks ago, 16,767. Remarkable acceleration. When you look where we were, folks, just 8 days ago, you're talking about really 5 or 6 trading days ago, you have the NASDAQ 100 down at a low of 15,492. We have gained 1,100 points in the NASDAQ 100 coming into the end of the year. That acceleration in the S&P 500, you're talking about a price point of 45.20 up to 47.87. 270 points almost. You can't overstate the move we've had in the last 5 or 6 trading days, accelerating higher. You got the Dow up about 15 points right now, 36,192. You see the Dow within about 300 points right now of all-time highs. Russell, a little bit of a laggard. You're talking about almost 200 points from the highs that we had back in the beginning of November, 2460. We jumped to commodities, currencies, Bitcoin, a little bit of negative action on Bitcoin since yesterday. We were up to 52,200. You see the acceleration begins at about 1 p.m. Eastern time yesterday. We're trading down about $2,300 on the session technically, 48,920. How about crude? It just don't stop in crude. Quite an acceleration higher yesterday. I mean, look at this chart I have on crude. 15-minute chart goes back just 5 days, and you got almost an $11 move in the price of crude, man. Watch out. You're trading at 76.36. There's your volatility recently. We were down to a low of 66.12 on December 20th, just 8 days ago. We were down to a low earlier this month of 62.43. And we're going to open with the 76 handle this morning on crude, 76.33. Gold contract this morning up above $4 at 18.13. You've given back some of the gains you did have, though. Look at that acceleration from 18.21. We're trading right now at 18.13. Silver up 29 cents, but giving back some of it as well. And we jump to notes and bonds. Getting a little bit of a lift right now. Higher prices, lower yield. The 10-year is up 4 ticks at 130.22. The 30-year is up 13 ticks at 161.05. We jump over to the volatility index. Very little volatility premium priced into this market when we just march higher every day, folks. Now, in context, the historical average, the historical mean for the VIX has been somewhere around 16. So we're still sitting at an elevated level compared to the historical averages. Interesting when you think about the volatility priced in, considering that the market is just setting all-time highs. I think we've had almost 70. I think we're at 69 as of yesterday. Record closes in the market. You're talking about almost 70 record closes. Folks, there's only about 225 trading days throughout the year. So you're talking about 1 out of every 3 trading days almost for the entire year, we've set a record. That's almost 2 records a week that you're talking about for the entire calendar year of 2021 as this market just marches higher in a big way. Let's jump around to some of the FANG stocks as we kick things off. You get Apple shares getting ever so close to that $3 trillion mark. I mean, Apple, look at the run it's had. Same thing. You put it on a 5-day chart going back just to where we were last Monday, and you got a 167 print on Apple. We're trading at 180 right now. You're talking about a $13 pop in an equity that has 16 plus billion shares outstanding. Every $10 is about $160 billion market cap added to companies. So you're talking about 200 billion almost this company, Apple, added to their market capitalization. You pull down to where we are, $2.954 trillion. Not far away at all. I think the number is about 182.80 something. So just under 183 would put Apple at the $3 trillion mark for the first time ever. Market's sliding a little bit as we come into the opening bell. S&P still up by 2, but taking a look at the overnight action, you're seeing a little bit of a sell-off here. We have the S&Ps were as high as 47.97. Just since about 8:45, you've seen a little bit of a sell-off. We traded from 47.95, went down about 10 points from that overnight session. And you can see we chopped around there from about 4:30 till about 9, just shy of 8:45. We're trading right now 47.86. Correlates to just basically where we closed yesterday in the markets as we come into the open in about 18 minutes from right now. We pulled up Apple. Let's check out Microsoft. Microsoft shares trading higher as well, but giving back some of it. You're up, you're flat right now. Microsoft 342.30. Amazon had some negative action yesterday, going to open basically flat to marginally higher. Amazon trading at 33.93. We jumped to Facebook shares. Quite a day for Facebook to the upside yesterday. You opened at 338. You closed at 346. So you're talking about an $8 gain, more than a 2% pop in Facebook shares. Some of that having to do with what I was talking about on my program. Seems like Oculus may have been a popular holiday gift. It's really interesting how sometimes the variables that play into things, and you think about the implications they could have. So you have the war of the consoles going on that's basically between PlayStation and Xbox, right? I haven't had a PlayStation or an Xbox in ages, but you have the new PlayStation, the new Xbox. They're pretty similar. They have their own game libraries. A lot of them, though, sold out. You can't get many of those consoles, especially if you're trying to get it last minute or anything like that. So what happens? Facebook is able to seize that opportunity. They have Oculus Quest 2 on supply. That turns out to be a big holiday winning gift, and I just imagine it may be pretty interesting if that's the acceleration that kicks off Facebook, getting a little bit of a surplus of holiday shopping as a result of the other consoles, giving them an opportunity by being sold out around the holidays for Facebook. Because I tell you, folks, I got Oculus Quest 2. It is pretty cool, man, how immersive. That's what I was talking about. Just that headset, right? You put on that headset, how immersive the headset actually is. You just completely feel in that space. It's a 3D environment. It kind of enlightened me to the possibilities of the future. And so, yeah, and where they went on that data, you had notes out yesterday that what happened is when I set up Oculus, what they have you do is they have you download the app on your phone. Okay, so it's probably somehow paired with the Oculus system. You download the app. So a very easy way to track Oculus sales is to see the app performance in the App Store. And the app was number 1 at one point in one category. I think it was top 5 or top 10, pointing to the fact that many people, Christmas Eve, Christmas Day, myself included, setting up Oculus for a holiday gift. And we'll see where that goes. I can tell you already, folks, I went in there and I bought a game for about $20. So you can buy games, right? You need to buy some games. There are some free ones on there, but it's just like a phone, as in you might be able to buy some free games. Then they're going to have in-app purchases if you really want to play. You're going to have to pay for the premium games that might be the best games out there. So I paid $20 for a game. It wasn't really that great. I looked into the refund policy. It's a pretty cool refund policy. The way it works is you buy a game, and this is a great way to do it because you're buying games, you never really played them, right? You're downloading them online. So I buy a game, I download it. I'm like, this is all right. It's not that great. I probably wish I hadn't spent $20. I look at the refund policy. The refund policy is you can refund the game within 2 weeks if you have not played 2 hours. That seems like a very fair, great policy. I'm going to go on there and buy a lot more games now. And if I don't like them, I'm going to make sure I return them right away. I'm in the ecosystem, right? You can see how that can accelerate a bit. Facebook shares, I should say Meta shares up a bit this morning at about 347. Stay tuned, folks. We got the S&Ps up by 4. We'll be right back.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TESS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TESS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TESS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We get the S&P is positive by 5 right now. That's 0.1% in the green. We get the NASDAQ 100 up 0.2% right now. You get the Dow barely in the green by about 26 points, and the Russell continues to lag in negative territory by a point right now. So we come into the year end, a lot of cool things that you can look at in terms of the entire year. NASDAQ poised to underperform S&P 500 for the first time since 2016 as investors shun tech stocks. Not so sure it's been a shunning performance. You got the NASDAQ up 23%. If that's what being shunned is, then kudos to them. S&P 500, though, up about 28%. That number was 27% before yesterday, folks. Last 2 times the S&P 500 topped the NASDAQ occurred in 2016 and 2011. All the stay-at-home, play-at-home, work-from-home stocks were dead on arrival in 2021. Like the pandemic didn't exist anymore. That's one CEO talking about an asset management firm. But nonetheless, interesting when you look at that has only happened 2016 and 2011. Tech stocks have been on a tear recently. Now, that is going to hit some ETFs. Arc Innovation Etf, one of the most notable out there. As the market plows ahead, you have their fund actually trading a little bit lower. Now, I was looking at this during the break. There's the Arc Innovation ETF. Okay, so you start the year off at about 140, give or take, maybe even a little bit. They're actually fortunate that they probably started. That's the closing print of the year at 124. They did accelerate higher for the first week of the year. They actually accelerated higher for the first 6 weeks of the year up to 159. Since then, you're down to 97. The actual return on the year, though, is going to go from the closeout of 2020, obviously. You're talking about a close at 124. So you're down, what do they put it? Down 20, they have our numbers down here, 22% in 2021. Here's the thing for context, folks, all right? If you're an investor in this fund and you make 150% last year, you better believe that it might be possible you get a pullback, okay? So you still just take the 2-year return of, if you're in this fund since the beginning of 2020, you're talking about a double bagger, which is not bad, 100% over the 2 years, okay? It's important to keep that in context, folks. These runs don't last forever in terms of from $33 to 160. A lot of that having to do with the biggest company she had in there, the biggest of all, probably Tesla. Tesla, in 2019, runs from 100 up to 800. That's an 8-bagger. She had quite a performance in there. Now, Tesla, though, is positive for the year. So she's been in some other stocks that have suffered, whether it's Zoom, one of those in particular, DocuSign, she's had some investments in. There's been a ton of winners and losers, and that's going to be a nice segue to our next article, folks. And that is going to be, here we go. It's December 1999, based on the NYSE shares touching new lows. Not what you want to hear, right? A little bit intriguing, a little bit enticing. Last week, when the S&P 500 closed at a 52-week high, you had 334 companies trading at a 52-week low, more than double the amount that marked new one-year highs. That happened only 3 other times in history, all of them partying like it's December of 1999. And that is some gentleman over there, according to Ramsey. Not familiar with who this is. Let's see, Doug Ramsey. He is the chief investment officer at Luthold Group. And it's not just a one-week phenomenon. The NYSE new lows now also outnumber new highs on a 6-week moving average basis. The last time that happened, as the S&P 500 hit a one-year high, was in July of 2015, right before a 6-month correction that saw the index lose around 14%. The Fed had months to taper when the economy was red hot and the stock market tape was very broad and healthy. Now they're finally poised to do so, with the economy cooling off a bit and the stock market internals looking weaker. I think that's supposed to say that at any time during the entire rally from the pandemic lows, the Federal Reserve announced earlier this month that it's going to speed up the withdrawals of stimulus. They're going to wrap up asset purchases. They're going to be raising rates. They're expecting 3 rates coming next year. But boy, when you look at that, folks, you better be paying attention to what's going on in terms of those big stocks, because they are carrying this market. When you look at the number of new lows versus the number of new highs, you look at it versus the market and making new highs across the board. Not the broad strength that you would want to see, because, man, you start showing some cracks in the armor and you might pay the price in a big way. Now, all things considered, right? I mean, Apple, I've talked about it many times. You just traded from 140 to 180. The company's got 16 billion shares outstanding. Every $10 is $160 billion in market cap added. It just traded up $40 in the final quarter of the year. You're going to add 600 plus billion market cap dollars to the index just on Apple alone, and all the other FANG stocks were running in the same time as well. I mean, Microsoft, you're talking about trading from 280 to 342. You're talking about a 20% acceleration in Microsoft shares in the final quarter. Google shares, a little bit of a cool off, but man, it's been quite a year for Google. I talked about them yesterday. I think they're up about 70% for the year on Google, growing numbers at almost 43% revenue or something like that, 40-something% revenue growth for last quarter for that company. And you're talking about advertising. You're talking about eyeballs on the web, folks. These tech companies. Facebook, still positive for the year, right? They've caught a lot of heat, but look at where Facebook opened at. I mean, you got to consider that Facebook closed out 2020 at a price point of $273. I mean, what are you going to open today? $346. So you're talking about almost a $70 rise from $270. Yeah, they're going to beat the market, Facebook, after all the angst. But of course they are. When you trade from $260 to $384, we've given back some of the gains. But look at the pop Facebook's gotten recently with $346. Now, here's what I'll say about Facebook, which I'm trying to wrap my own head around. Long term, you could probably buy some Facebook. I imagine, and we'll call them Meta. I imagine that Zuckerberg's seen the promised land. The one thing scary about that is that it's going to take a lot of money to get to where he wants to get to, because I imagine Zuckerberg understands. It makes me think of the iPhone, okay? Steve Jobs understood that he had to be first to the market with a phone in your hand that was the real internet that you were used to looking at on your computer. Do you remember those first iPhone ads that came out? And they literally said something like, it's the real internet. It's the one you're used to. Because prior to that, you could access the internet, but it would be some archaic looking URL type URL internet page, right? It would be a cryptic internet page that was trying to be displayed on your phone, but couldn't quite be displayed in the manner you were used to that you're looking at on your computer. Steve Jobs understood he had to be number one to that market to change the world, to bring a phone to your hands that was basically a little computer. He did it. And to this day, they're still paying dividends by being first to market on that phone. Zuckerberg probably understands he needs to be first to market with the technology that changes everything, all right? The phone that had internet, the phone that could access the web, was not what changed the world. The phone that could access the internet in a way that we were used to, okay, in a way that was completely almost perfect, as in it was the internet we're all used to on computers. It wasn't some half-bridged makeshift internet. Meta is going to be looking for the same thing, okay? The Oculus right now is not a game changer to our lives. But if you enhance that and you put a suit on everybody and you can like feel somebody grab you or something like that, right? Maybe you got a treadmill underneath you so you can actually walk around when you're in a room. If you get that experience and it's completely immersive, it's going to change daily activities for a lot of people. I mean, the younger generation folks already spends so much time online. And I think Zuckerberg sees it in a big way. And he realizes, though, that it needs to be perfect. It needs to feel like you're literally living like you are outside of the metaverse. And that is going to take a lot of money, folks. It's like that last mile on delivery. That last mile for feeling like you're immersed in a computer, that it's real life. Whew, it might get expensive, but boy, whoever figures it out, they are going to be very wealthy. And Mr. Zuckerberg, he's in pursuit of that goal. Stay tuned, folks. When we come back for the open, S&P's up by 4, NASDAQ 100 up by 28. I'll be right back.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We got the S&Ps right now up 4 points on the open. NASDAQ 100 up 38, Dow up 33. The Russell giving it back negative by 6 right now. You take a look at these on a longer-term time frame, right? You checking out the Russell. It's pretty intriguing, the consolidation we've been getting on the Russell right now. You come into 2020 at 1654. You come into, zooming in, 2021 at a price point of 1978. So we've gained What's that going to be? 2250. So about 270 points. So what is that? You're going to be talking about like a 13% gain in the Russell. It looks like a consolidation year, but you did accelerate higher to start the year from about 2,000 up to a price point of 2366 by middle of March. And you've just been in a consolidation all year on the Russell. You're right in the middle of that zone at 2254 after breaking up to 2460 earlier. S&P's right now, though, quite a different story, man. You check out that chart. It is such a well-defined channel line. I would keep that on my radar, folks. I mean, you're trading short-term. It's not as big of a deal. You're trading long-term. I'd watch out for that one in a big way. Now, it's been carried by the likes of the big tech stocks. Apple, a little bit lower this morning. There's your negative action on Apple, 179.70. Now, Apple, what's interesting is they're going to be closing stores in New York. 11 or 12 of them? Let's see. What are we doing? Closes stores to most customers in New York City due to surge in COVID cases. Now, what's different here, let's see how many they got here going on. 11 locations, Manhattan, Brooklyn, the Bronx, and Staten Island. Doesn't amount to a complete shuttering, though, is that they're going to allow people to pick up orders online at the store. So a little bit different from when they had closed them before. Those ordering online aren't restricted from picking up products outside of those stores. The reason why I bring it up in particular is because look how the market is just ignoring any bad news, folks. Now, we've gotten very used to order online, pick up at the store, right? I imagine this may actually be a beneficial situation for Apple. Imagine, you don't need as many workers potentially in the stores. I wonder if they're going to do as much business. It's possible. It's at least possible in terms of how our shopping habits have changed, that might not hamper the amount of business they would normally do as long as you can shop online and pick it up in the store. But I feel like in any other world, if Apple came out in a normal market, folks, imagine we don't have COVID, right? And something's going on. Maybe they just have an outbreak of their own. We saw these types of closures going on with food, with Chipotle and stuff like that, Listeria or whatever. Let's just say for whatever reason, Apple needs to close 12 stores in New York, but they say, don't worry, people can pick up their items if they want. Apple stock would be cratering, man. There's no way. New York, do you know what the rent on those properties usually is going to cost? Manhattan, Brooklyn, the Bronx, Staten Island, closing those store locations, all of them in New York. It seems like Apple should pay a penalty for that, but they're not. They're not paying a penalty at all. You're down 0.2%. You're trading at 180. You're basically trading at all-time highs as they navigate this. Now, that's not to say I'm giving you both cases here, but you got to keep your spikes up on your back, folks, because I'm seeing all this stuff, and it's like, really? So Apple's going to close every store they have in New York to foot traffic, okay? And meanwhile, you're telling me that the stock doesn't even budge? And we're up from 167 to 180. We're up $13 over the last 8 days. And meanwhile, they're shutting every store they have in New York to foot traffic. I imagine you get people in the store, even when you're picking things up, folks, that you might have some impulse buys, right? There might be something there. Maybe you're just walking by. Maybe you got tourists in New York, right? What about that? What about the tourist deal of New York, the business they're getting, right? I find it very hard to believe that company is not going to lose some business by that story. But the market is saying, no, it doesn't even matter. Now, let's talk about the market in general for a moment. So we're coming into the end of the year at 28% gains, folks. 28% gains in the S&P. Okay? Now, this follows, okay, I'm going to put this out. I put out a note to my subscribers yesterday just talking about the remarkable performance of this market. I'm going to put this on a 5-year weekly to start, okay? You come into 2020 at a price point of about $32.15. So 2020, we returned 18.4%. Heck of a year considering the drawdown you had to encompass. Heck of a year considering the fear that gripped this market as COVID started to take over from February. So you returned 18%, 18.4 to be exact in 2020. Okay, and that was after a return because of the pullback we got at the end of 2018. We had quite a nice return in 2019, 31.49%. So you got 31% in 2019. You got 18.4% in 2020. You got 28% going on in 2022. You did have a negative year in 2018, but just barely, folks, minus 4.38%. Okay, so you go back 5 years. Coming into this year, okay, 5 years going back, we're talking about an average return of 15.9%. That's including the negative year you got in 2018. You want to hear something even crazier, though, folks? Only one negative year. Now let's back it up on a monthly, okay? And really start the fun. Only one negative year since 2018. Now, quite a pullback, okay? We got a pullback from 1586 to 665.75. My goodness, right? March 1st, 2009. So since 2009, you're talking about 13 straight years of averaging. You ready for this? When you combine all this, 16.3% for 13 straight years, folks. That stuff doesn't happen very often, okay? It does happen because it just happened. But you have to look at the historical perspective of things, folks. If you have $100,000 in the market, folks, and I'm not cherry picking the lows, okay? I'm cherry picking basically starting things off in 2009, which is pretty close to the lows. It is, because there's your closeout for the month of, so you're closing out at 900. I mean, you're still well off the lows, man. The lows are 665. This calculation is going off the close of 2008. So you're going off a valuation of 900 in the S&Ps, okay? If you invest $100,000 and you compound that at 16.3%, even call it 16%, something like that, for 13 straight years, folks, you're talking about almost $700,000. Okay, so people who had $100,000 in the market at a price point of about 900 in the S&Ps, okay? So that's down from 1586, but it's not the lows. You're not cherry picking the lows. You're talking about a 7-bagger over the last 13 years. You're talking about 16.3% returns for 13 straight years. The market can't return almost 20% a year, decade after decade, folks. At some point, even a healthy market should have more of a pullback. I'm trying to, we're talking about new highs versus new lows, right? New lows doubling new highs, right? We're talking about 13 straight years where we only have one negative year, and that year is only 4% in the red. And meanwhile, we got years of 27%. We got years of 31.5%. We got mammoth years in there. Just keep it in mind, folks, because at some point you are going to get a pullback, man. These valuations from 667, 665 to 4,700. I mean, you see why so many people in their retirements right now, you go from a price point where you got 100 grand in the market 13 years ago, you're sitting on 700 grand. You got 150 grand in the market in 2008, folks, you're a millionaire if you just put it in the S&P. That's a pretty staggering statistic in this market. Nonetheless, here we are, sitting at 47.85. We're up by 3 points in the S&Ps, folks. Stay tuned. We're going to be talking a little bit of Tesla when we come back. We'll take a look at Arc one more time as well. Stay tuned, folks. We'll be right back. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&P. All the markets catching a little bit of a bid right now. We get the S&Ps up there. Look at this pop we just got from a price point of 47.82. We're back at 47.91 right now. You're popping about 10 points in the S&Ps. Dow really catching a bid right now, 36,314. I think we're going to be bumping up. We're only about 100 points away. There's our daily. Yeah, we're about 130 points away from Dow record territory, 36,446. NASDAQ 100, you're talking about 200 points. I mean, it's very realistic, folks. NASDAQ, you're just more than 1% off the highs. S&P is making highs as we speak. You got the Dow right now, 0.5% off the highs. You could see the three of them hit new highs, all three of them today within reach. All right, jumping back to ARC for a quick second. I meant to talk about this as we finished up the conversation about their returns. For the last couple of years, negative action for ARC as we come into the end of the year, even underperforming the market, but that's after a banner year in 2020. Yes, in 2020. One thing that I found somewhat amusing, last week you had Cathie Wood tempering a projection for returns at ARC Investment Management after sparking criticism about the wording of some forecasts. In the clarification, Wood said she predicts a 30 to 40% compound annual rate of return during the next 5 years for ARC's disruptive innovation strategies. Is that tempering return? And here's the article that they referenced there. Tones down 40% return forecast to avoid misconceptions. Revised the wording in a report that projected big returns for her flagship strategy. It's just amusing, folks, when you start talking about tempering projections and you put out a 30 to 40% compounded number over a period of 5 years. I mean, you know, it's possible. She has a very longer term perspective of investing, which on some of these technology companies can pay off dividends like it did in 2020, but could also hurt you in 2021. I mean, a lot of the companies she's investing in, they have super bright futures, but they've seen a re-evaluation of their valuation. Now, Tesla, one of them in particular, but Tesla was positive this year, okay, even as you had ARC down. I mean, they were a big reason for the run-up they had in 2020. They unloaded some of their position in Tesla, I believe. I forget where exactly ARC took some money off the table, but they did, probably wishing they kept a lot of that money in there, as you're going to have Tesla. Tesla's closing out a banner year. Well, not quite as banner as 2020. But you closed out. I mean, it's remarkable to even remember. You closed out 2020 at a price point of about 700. So you're going to be up more than 50% this year for Tesla shares at 1102. Now, that's a perfect segue to Tesla. Webbush, how about another 30% pop potentially next year on China demand? Webbush putting out that 30% might be the number. Shares in the electric vehicle maker could gain nearly 30% over the next 12 months. That's Dan Ives, notable analyst at Webbush. He's always out there talking about Apple as well. He's been pretty dead on Apple, to give him some credit over the years. He's been a huge Apple bull. There's no bigger bull company right now than Apple at almost $3 trillion. He expects component shortages to ease next year, allowing Tesla to better meet growing demand in China, while new factories in Austin, Texas and Berlin should alleviate global production bottlenecks. mean, 30%. What are you talking about? You're talking about 1,400 and change. You're talking about pushing 1,450 by the end of the year. Not outlandish when you look that we were just trading at 1243.49 on Tesla not that long ago. This is a weekly I got up there. You're talking about in November. We had a 1243 print. Look at the pop, man. This company, you're up another 1.2% today for Tesla shares. All right, let's jump back to commodities. Gold catching a little bit of a bid. Gold just kind of finding some support down here at that 1750 price level. Gold popping a little bit over the last couple of weeks. We're at 1815. You're up $6 on the session today. Crude, as I talked about on the beginning of the program, man, just remarkable strength. I mean, you look at crude, just back it up again for the 15-minute. If you weren't checking out the beginning of the program, folks, 15-minute going back 5 days, you're up $10 from where we were last Monday. $10 from 66.12 to 76.09. And we jump to notes and bonds right now. A little bit of higher price, lower yield. You're talking about a yield right now of 1.457%. 1.457%. The yield on the 10-year. Let's check out the VIX. Sitting just above 18 at 1801. All right, what else do I got pulled up here in this market in terms of what we're talking about? We talked about Apple. I mean, in terms of stocks making moves, no real action, of course, today. It is a slow week of action. And why not? I was finding this article interesting. The lines between beer, soda, and spirits are blurring as beverage companies seek sales growth. In the hunt for growth, beverage companies are experimenting in new categories, blurring the lines between beer, soda, and spirits. Non-alcoholic beverage giants Coke and Pepsi are entering alcohol, while brewers are pushing into hard soda and spirits. Now, what was the one? Is it Sam Adams? No. What is Sam Adams' symbol? I should know this. Come on. Oh, it's going to be Boston Beer. What is it? Sam. Yeah, Sam. That's what I thought. Okay. You want a lesson in how valuations can re-trigger, though, folks? This stock, my goodness, from $13.49, they were thinking that hard seltzer was going to take over the world. Not so fast. You trade from $13.49 down to $435. You've gotten a little pop from them to $506. But anytime you're dealing with such a high growth trajectory where the multiples are just staggering on this company, they can change that quickly, folks. And man, this has been a lesson. You think, I mean, this is a great company, Sam Adams. They have a huge following. But this whole valuation was triggered off of their hard seltzer line, which turned out the whole industry was not even growing at the rate that they thought, let alone their brand within the industry not growing at the rate that they thought. But things are changing. And thankfully, alcohol is not as big of a deal in society anymore, folks. It's great to see that actually people are drinking less. In 2020, total beverage alcohol consumption actually rising. Okay, the biggest gain for the industry in nearly 2 decades. Remarkable. And that is a factor that they've been switching it up. In terms of beer was the only category to see a declining volume. Beer going down. All right. Hard seltzer cans, mixing their own cocktails. Hard seltzer, I imagine, one of the big reasons there. Premium dollars going into ready-to-drink canned products in the cooler, and there's growth again, is what they're talking about. But one thing I would say, folks, alcohol, nothing wrong with having a few cocktails, having a good time, especially around the holidays. Listen, I always put it out on my on my newsletter, and I talk about it here. And the reason why I talk about it, folks, is because you have to prepare to make decisions before the moment to make that decision, all right? We got New Year's Eve coming up. And I say it because when you're young, there's a lot of alcohol flowing, all right? Young people make stupid decisions, but you're supposed to mature and make smart decisions. And when it comes to drunk driving, folks, it's a perfect segue. We're coming into the final break of the program here. We'll come back and we got 3 minutes. But please, take some time, okay? And thankfully, we have enough alternatives out there in terms of Uber and Lyft, all right? We own some Uber in my newsletter, Rocket Equities and Options. Go take an Uber. Support our shareholders over there. Take a Lyft if you want as well. They do a great job as well in terms of carrying around their customers. But the point being, folks, plan to take that. You have to make the plan, okay? If you're going out on New Year's, you have to be conscious of the fact that if you have too many drinks, you have to pick up the phone, order an Uber, leave your car, have a beautiful ride home. Everything is great because, man, life and death is in your hands when you do that. And it seems like most of the time people don't really realize the magnitude of the decisions they make when they're drunk driving. And so plan for that, folks. We're around the holidays, make it through the holidays nice and safe. Have a good time. Be safe. Take that Uber, take that Lyft. Protect yourself. Protect the other people on the road with you. It's a beautiful thing. Stay tuned, folks. We'll be coming right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got all the markets in the positive now, even the Russell up about 7 points right now, trading at 2266. Gary, I appreciate your questions over there in the YouTube Tigers Den. Not too familiar with the uranium stocks, unfortunately, Ben, so can't really give you too much guidance on those uranium stocks. But jumping to home stocks, the charge higher continues, folks. U.S. home prices, how about 18.4% from a year earlier? Just remarkable. The gain, slight deceleration from the 19.1% year-over-year increase in September, but about in line with what market was looking for. All 20 cities posting double-digit annual gains. Let's see. Previously occupied homes, sales of previously occupied homes rose in the third straight month in November. Excuse me, I'll start that over because it's an important one. Sales for previously occupied homes rose for the third straight month in November to a seasonally adjusted annual rate of 6.46 million. 18.4% was the number, all 20 cities. The hottest, Phoenix, 32.3%, and good old Tampa, 28.1%. We love to see 28.1%, just staggering, folks. You want to talk about inflation? 28%. If you're talking about a $300,000 property, What is that? I got to do simple math. I mean, you're talking about in 1 year, you have a $300,000 property. Let's just say it's 30% for simple math, okay? Goes to $390 in a year. I mean, when you start thinking about the equity gains that somebody can have, you buy a $300,000 property. Let's just say you put down 10%. A lot of times you can put down 5%. Let's say you put down 5% on a $300,000 property. You're putting down 15 grand. Well, you just made 90 grand in equity. Poof. The returns are staggering, folks, and inflation is here. Miami, 25.7. The smallest increases, you got some big cities, Minneapolis and Chicago, but still at 11.5%. Just staggering numbers, and it's not letting up, folks. Last week, mortgage rates, 3.05%, helping put a lift in this market as well. And you talk about a lift, we're back to higher prices, folks. Look at that rebound. We're pushing all-time highs right now. You got the S&Ps up by 12. You got the NASDAQ 100 up by 25. The Dow is pushing right near all-time highs as well. Thanks so much for starting your day with me, folks. Stay tuned. We got our man Basil Chapman. He's coming up live next with the Tiger Technicians Hour. Have a great Tuesday, everybody.